I'm Daniel.
And I'm Ira.
And welcome to today's deep dive. We are looking at a market that is just caught in this massive, unprecedented tug of war for Tuesday, April 21, 2026.
Yeah, it's a completely wild dynamic today. On one side, you have these skyrocketing energy prices from the Middle East conflicts, which, they're threatening to bring back this rampant inflation.
Right, but then pulling on the exact opposite side, you have this completely unstoppable, cycle-agnostic wave of corporate AI investment.
Exactly. And that AI wave is somehow miraculously keeping the floor from completely falling out under the market fundamentals.
It really is. But real quick, before we dive into the timeline, we just want to explicitly state that this deep dive is strictly for market context and discussion.
Right. We're here to help you understand the baseline you're operating against. This does not constitute personal investment advice or, any sort of recommendation.
Exactly. All right, so let's get into it. Session 1, what set the stage before the U.S. session?
Well, to answer that, you really have to look at the carryover tension from Monday, because the geopolitical table was already set before anyone in the U.S. even woke up.
Yeah, the global energy supply chains were already fracturing.
Right. Kuwait Petroleum Corporation had just declared a force majeure on their oil shipments amid that ongoing Strait of Hormuz blockade.
Which, when Kuwait declares force majeure, that's not just legal posturing, right?
No, not at all. That is the physical market telling you that actual supply is effectively stranded. And then late Monday night, things escalated pretty aggressively.
The overnight headlines were just brutal.
Yeah. At 11:21 p.m. Eastern Time, Iran's foreign ministry strongly condemned a U.S. seizure of a commercial vessel, the MV Tuska.
They demanded the immediate release of the crew, right?
Right. And then the retaliation for that was just incredibly swift.
Right.
Because by 8:08 a.m. Eastern Time on Tuesday morning, Iran's military officially reimposed strict control over the Strait of Hormuz.
Reversing that brief reopening we literally just saw.
Exactly. And, the fundamental logic of why this matters so much to equities is really a mechanical transmission.
Walk us through that mechanism.
So higher oil prices mechanically feed straight into headline inflation, right? Everything costs more to ship.
Yeah.
So when inflation spikes, central banks are forced to keep interest rates elevated to cool things down. And higher rates ultimately just compress equity valuations.
Wait, let me put my game theory hat on for a second here, because we always tend to treat these geopolitical events like unpredictable natural disasters.
Bit of an earthquake or something.
Right, like an earthquake just happened in the Strait of Hormuz. But looking at these moves, are these actually calculated?
What do you mean?
Well, could both sides just be playing a really high-stakes game of chicken? Like, they're maximizing their leverage right before ceasefire deadlines rather than genuinely blundering into a hot war.
Oh, that's a really interesting way to look at it. Brinkmanship as a negotiating tactic. Because you inflict maximum economic pain to force capitulation.
Exactly. You don't want mutually assured economic destruction. You just want the other guy to blink first.
Yeah, and frankly, equity markets seem to subscribe to that exact theory in the morning.
They did, yeah.
Because despite soaring oil prices, at 5:55 a.m. Eastern Time, U.S. futures actually rose.
Wait, really? With a maritime blockade in place?
Yeah, because we had a very heavy slate of Q1 corporate earnings hit the tape. Companies like United Health, GE Aerospace, and RTX.
Oh, wow.
Yeah, it reminded investors that bottom-up corporate fundamentals actually remain remarkably strong.
So to quickly summarize session 1, equities were surprisingly resilient heading into the open, completely defying that morning energy shock.
Yeah, the earnings floor really held it together.
So a minute, anyway. We're going to take a really short break, and when we return, we'll see exactly how that fragile morning optimism held up when the opening bell actually rang.
Welcome back. Let's dive right into session 2. What moved markets during U.S. trading hours?
And spoiler alert, that morning optimism did not last.
It really didn't. It hit a brutal reality check right at 8:30 a.m. Eastern Time. The U.S. Census Bureau reported that March retail sales beat forecasts.
Which usually is a good thing.
Usually, yeah. They rose 1.7% to $752.1 billion. But a huge chunk of that was driven by those rising gas prices we just talked about.
So it's not consumers buying more things, they're just paying more to commute.
Exactly. It's hot data but it's inflation-driven hot data.
Yeah.
And then just 5 minutes later, at 8:35 a.m. Eastern Time.
Oh, the Trump interview.
Yeah, President Trump stated on CNBC that he did not want to extend the Iran ceasefire. He explicitly warned that the military was ready.
Wow. So any hope for diplomacy just instantly evaporated.
Poof. It's gone. Crude oil spiked incredibly aggressively on that headline.
And if that wasn't enough, we then got the Fed's regime change moment.
Right. At 10:36 a.m. Eastern Time, Kevin Warsh was at his Senate confirmation hearing, and he explicitly called for a Fed regime change and a smaller balance sheet.
Okay, let me jump in with an analogy here to help explain this valuation multiple compression, because it's a lot for you as a listener to digest.
Sure. Go for it.
Think of the market as a giant seesaw.
Okay.
On one end, you have those heavy, robust corporate earnings we saw this morning. They're weighing their side down, keeping prices up. But on the exact opposite end is the discount rate.
Right.
So when Kevin Warsh jumps onto the discount rate side with threats of structural tightening and a smaller balance sheet, it doesn't matter how heavy those earnings are.
The valuation just gets crushed.
The seesaw slams into the dirt.
That is a perfect way to visualize it.
Right.
Because the structural tightening just overpowers everything else. And the geopolitics just kept getting worse intraday, too.
What else happened?
Well, by 12:36 p.m. Eastern Time, Hezbollah was firing rockets into northern Israel.
So it's spreading. Contagion.
Exactly. And then at 1:17 p.m. Eastern Time, Vice President J.D. Vance's trip to Islamabad was officially put on hold.
Wow, the diplomatic channels were just completely shutting down one by one.
Yeah. So unsurprisingly, the market couldn't hold up. The S&P 500 closed the U.S. session down at $7,128.00.
Ouch.
The 10-year Treasury yield climbed to 4.313%, and WTI crude settled up at $90.42.
So to wrap up session 2, we basically saw this relentless intraday slide, right? It was driven by this toxic combo of hot retail data, a hawkish Fed, and geopolitical walls just closing in.
A perfect macro storm.
It really was. We'll take another quick break, but don't go anywhere, because the corporate world was definitely not staying quiet during all this macro noise. All right, welcome back for the final segment, Session 3, Corporate Events Recap and What to Watch Next.
And this is where that AI cap x counterweight really comes into focus. While macro indicators were just chaotic today, the tech mega caps remain stubbornly focused on AI.
It's like they're living in an alternate reality.
Seriously. As some carryover context, just the night prior, Amazon actually expanded its Anthropic partnership with up to $25 billion.
$25 billion with a B.
With a B. Proving that massive capital deployment right now is totally cycle agnostic for them. They don't care what oil is doing.
Right, and we saw that exact same sentiment from Apple today, too. At 2:36 p.m. Eastern Time, their incoming CEO, John Turnus, told staff in a private meeting that AI has, quote, almost unlimited potential.
Right. Now, Apple stock did fall 2.52% on the succession news itself, but that broader narrative of aggressive tech investment, it provided this vital psychological floor for the market.
Wait, I have to push back on that for a second. Is this whole AI narrative just, too broad? Is it too convenient?
Okay.
Like, is unlimited AI potential just a neatly packaged excuse for markets to ignore these blazing geopolitical fires? Are we just using it to justify incredibly high valuations while the world burns?
Well, it's certainly priced for perfection right now. The market is betting heavily that tech can simply outgrow physical reality, which ironically makes the after-hours twist today even crazier.
Oh, the twist, yes. Right after the U.S. markets closed at 4:10 p.m. Eastern Time, after the market had spent all day absorbing that fear, President Trump extended the Iran ceasefire.
To allow more time for proposals. Just a total whipsaw.
Completely. Well, folks, the market today had more sudden reversals than the Strait of Hormuz.
Seriously.
We started the morning celebrating strong earnings and Apple's promise of unlimited AI potential, but ended up needing a stiff drink after Kevin Warsh promised a regime change at the Fed. With crude oil knocking on the door of $100 a barrel, it feels like the only thing with unlimited potential right now is the cost of your morning commute.
Yeah, no kidding.
But look on the bright side. If you didn't enjoy today's geopolitical roller coaster, President Trump graciously extended the ceasefire after the closing bell. So rest up, because we get to strap in and do this all over again tomorrow.
We really do. And looking ahead to what you should watch next for tomorrow, Wednesday, April 22. At 10:30 a.m. Eastern Time, we get the EIA weekly crude oil inventories.
Which is going to be massive for WTI and inflation expectations.
It's huge. Plus, we've got the Treasury 17-week bill auction, a 20-year bond auction, and details coming out on a Treasury buyback announcement.
Lots of supply hitting the market.
Exactly.
All right, before we let you go, I want to leave you with one final provocative thought to mull over.
Let's hear it.
We've spent this whole time treating the AI infrastructure boom and the global energy crisis as two separate narratives. But think about it. Massive AI data centers require unprecedented amounts of electricity.
Gigawatts of power.
Right. So what happens when this supposedly cycle-agnostic tech boom collides directly with a geopolitically constrained, tapped-out physical energy grid?
That is a wall they're going to hit very, very fast. Thank you so much for joining us today for this deep dive.
We would absolutely love to hear your thoughts and theories on all of this, so please share them with us in the comments.